Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. It's different from anything I've seen before, but it brings together all the things I love. I think that the idea that Bitcoin could be a new world money system makes a lot of sense. From what we're seeing in the US private sector and hearing from the state treasurers we work with, the movement has already begun. For example, I think the state of Wisconsin has put some spot ETFs in their pension plans. They're not self-investing in Bitcoin or anything, but they are investing in them. And that strikes a chord with me. There are also bond funds. I don't think they'd be the first ones to accept Bitcoin. I have a different thought about ties, but because of Fed policy, they've been in a lot of pain lately. Because of this, bond managers are starting to switch their focus to Bitcoin. For some reason, I can't remember the name of one that stood out a lot. But the 13F files came out and we can now see that it was actually very interesting for every manager that added gold in the last quarter. 10 added Bitcoin, so this was mostly helpful because they were both done through ETFs. Forget about BlackRock, Fidelity, and the biggest banks in the world. Bitcoin ETFs have already made it possible for them to spend big amounts of money in Bitcoin. Even more important things are coming up. Governments and state budgets, like the one in Wisconsin and El Salvador, are adding Bitcoin to their books. This is the most recent thought from Cathie Wood of ARK Invest. In the beginning of this year, Cathie Wood and ARK Invest put out studies on how Bitcoin might affect institutional portfolios. They learned that adding Bitcoin could raise profits while lowering risk. Modern portfolio theory says that putting together assets that are not linked to each other can increase returns and lower risk. Bitcoin is great for diversifying investments because it doesn't have a strong link to other assets. ARK Invest thinks that each Bitcoin could be worth $2.3 million if banks invest the right amount of money in it. In her most recent interview, Cathie Wood said that this way of thinking makes Bitcoin a must for all institutions, as well as states and countries. It's different from anything I've seen before, but it brings together all the things I love. This idea that Bitcoin is a new global money system fits right in with how I think about economics. Since we worked together on our first white paper in 2015, Art Laffer and I have been together on this. He's been so excited about it. He's so excited about it that he just went to El Salvador with me to meet with President Bukele and push for not only helping with Bitcoin, he doesn't need any help with that, but also with economic and educational reform. When Bitcoin and AI work together, they create a huge opportunity. Yes, but the world's money system. That's Bitcoin technology. It's the part of the internet that writers forgot about in the early 1990s because they didn't think it would be used for business, finance, and other things. Then there was a new asset class, making it 3-in-1. This has never happened before. I believe that President Bukele is at the head of a great movement of more enlightened leaders in emerging markets who want to move away from the bad cyclical and very cyclical booms and busts, and especially devaluations, which is a very important topic right now. I find it hard to believe that the Egyptian pound fell 40% in March and the Nigerian naira fell 50 to 60% in the last year or so. I mean, think about how bad that is for people's ability to buy things and their wealth. Basically, Bitcoin, which I'm sure I don't need to explain to this group, is a way to protect ourselves from what we think that is the taking away of wealth. That's why I think it's getting more important. The dollar has been getting stronger. In terms of most other currencies, the dollar has gone up a lot in the last 10 to 12 years. A lot of people don't seem to know how much it's up. And that hurts some of these developing markets, so Bitcoin couldn't have come at a better time. If you have a smartphone and can connect to the internet, you can use this insurance policy. I believe that more and more people will use it to their advantage. So the smart leaders in these countries are going to add Bitcoin to their balance sheets. This is because the IMF doing bad things when funds run out is one of the worst things that can happen. The tax rates go up. Spending is cut at a time when governments are already having a hard time. It's a failed tactic that they keep using. I don't get it either. I believe that even El Salvador is looking for money from the IMF. If I were a leader in a developing market, I would say, okay, well, this really doesn't work when it comes to getting countries out of trouble in a healthy way. It works in the long run. Something will happen if you give them money and run everything for them. Not the right things will change. It's not based on what the market wants. The change has already begun based on what we see in the US, private sector, and what state treasurers we work with tell us. On the other hand, I think the state of Wisconsin has put some spot ETFs in their pension plans. They're not self-custody in Bitcoin or anything, but they are there, and, that really speaks to me. They're also bond funds. I don't think they'd be the first ones to accept Bitcoin. I have a different thought about ties. But because of Fed policy, they've been in a lot of pain lately. Because of this, bond managers are starting to switch their focus to Bitcoin. One of them was very clear. The 13F papers came out, and we're starting to see some very interesting things for every manager that added gold in the last quarter. I can't remember the name of it, though. 10 put Bitcoin in. So mostly through ETFs for both of them. That was very helpful. That helped me understand better because compared to gold, institutions are still very new to Bitcoin. Also, I'd like to think that our study, which we did while trying to reach institutional investors, basically shows that because Bitcoin has such a low correlation to other financial assets and because we think it's a new asset class, every institution has to think about it now that the SEC has given this wrapper, at least the ETF, the green light to hold Bitcoin. It's now a matter of, what are your competitors doing? It usually means that if you add Bitcoin to your portfolio, your return per unit of risk will be higher over time than the competition. This is because Bitcoin's returns don't change much compared to the returns of other assets. So there will be a lot of competition out there. Yes, this makes sense, the chances of better risk-adjusted returns for a given portfolio if you put money into Bitcoin. That makes sense. In the beginning, when we released our first white paper in 2014, the same year we started ARK, we were made fun of in many ways. I mean, the flip has been great for 10 years. What I think is also going on is what's going on in Washington. 76 Democrats, including Nancy Pelosi, have signed on to FIT21. I'm not sure if that's what it's called, but it's pretty crazy. That has made a lot of people realize that it can be used in more situations than just as a radical form of money, which is how people used to think about it. Now, a new type of asset that is good for our people, free, and shares many of our ideals. Very interesting. This year's election is mostly about one thing for many people. And I think that vote made it clear that yes, there was a time when Democrats were against and Republicans were for, but that's changing so quickly. I also think it's pretty important that President Trump recently said the things he did and is now taking crypto donations for his campaign. He's trying to reach out to the community. I think Satoshi really got this relationship. I'm not serious. I don't know if he, she, or it thought about that, but there is something called the in-equity markets. It was the first job I ever worked on when I started in the business. No, this would have been the first piece I did that was more about politics and economics. The first one was about Hong Kong in 1997. But what was this election pattern of every 4 years and how the stock market moves during that time? Yes, I lied and said that the 4 years were the same as 1 year and adjusted for the seasons. At that time, the population was multiplied by 11 to find out how the seasons changed. And there is definitely quote-unquote seasonality around the election period for president every 4 years.